Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. As widely expected yesterday, the RBA starts with a predictable beginning for 2018 by leaving its cash rate unchanged for the 17th month in a row at 1.5%. With inflation running below 2.5% and close to its forecast, there doesn't seem to be any urgency at this point for the RBA to raise rates. But we only need a slight change in figures. And also we do have the Fed looking to hike rates in March, could all change this rather picture into a hawkish one. At present, we did have a challenge to the downside and found support at 78.35. And from the rebound, could, in the short term, put a squeeze up towards 79.35, which is where I believe the market will take the opportunity to start shortening the market. Overall, I do expect to see a rejection from there and look down towards the lows that we recently saw. Also take note that the 60-day moving average does come in at 77.70, and it is viewed from that point that CTAs or hedge funds, CTAs standing for commodity trading advisors, now they come in normally to sell part of their position. In this stage, as you can see from a point, is bullish all the way up from the break recently around 76.80. But now with the level coming in at 77.70, a break beneath there would give scope towards 75 cents. So do keep that in mind. But on the day, the intraday picture looks like a short-term squeeze. Well, overnight we did get the break of the full body of this candle to support this shooting star. But no follow-on was seen to the downside from the break of 123.5. Nevertheless, a little bit of caution to the bear case, even though the technicals are supporting it, is the fact that the US dollar is struggling to regain its momentum. If that's the case, then we could see all the currencies across the board reverse if the US starts to break down again in terms of the dollar index, which is traded against a basket of 6 weighted major currencies. Nevertheless, I do expect to see weakness to continue. Now, dollar yen did rebound off the lows of this resistance, which is now support. And very good bounce that does imply we could see a further rise, with the target holding towards 109.65 and a break above there, which we did see briefly this morning challenged, would look towards 110.50, which is what I prefer. Dips are still a buy in the short term. My objective of 138.5 for the pound was reached after the overnight decline did stab there before rebounding. With the resistance capping at 139.90, I do expect to see further weakness for the pound and look back towards the recent lows. The gold picture took a very heavy tumble overnight, and $26 to be exact, before rebounding off the support that comes in at 1,320, which I was calling to hold. Overall, we should see further rise, and it currently has respected this level, and we are seeing some modest gains as it trades to above 26 towards now 28 as a target, which could lead on towards 33. In the unlikely event we do get a break of 20, then this would give weakness towards 14 and exposing the region of the low 1,300 region, but I don't see that at this point. It would be interesting to see that $16.60 is still holding as a level for silver, even though we did get a sharp turnaround last night. I do expect to see demand from this level. I'm not getting short down here, and I do expect to see a rebound and look back up towards the recent highs that came in from yesterday of $16.95. And to round off with oil, the market is bearish and is looking still towards $62.60 after we nearly got there overnight. With the technical implications still bearish, I still expect to see a challenge there and reassess, with the resistance now seen at 63.75. So that wraps up for today. Thank you very much for joining me, and I hope you enjoy the rest of the day.